Hello, welcome to Letham Trading. Now we are going to see Nifty November month backtesting. And in this November month backtesting of 2022, we'll see how many times our target was hit, how many times our stop loss was hit, and what are the days where we should not take any trade. Okay, before going to the backtesting, I will briefly uh, describe you about the levels. See, this is CPR. What are the indicators we use is one is CPR, and the next one is Camarilla points, and the third indicator is the 20 EMA. Here this is CPR, and the Camarilla levels are, the levels above CPR are called H3 and H4. Below the CPR are called L3 and L4. This H4 and L4 are called breakout levels. Mostly in narrow CPRs, breakouts are possible, and in wide CPR, H3 to L3 reversals are possible. This is about our indicators and the 20 EMA. We'll see this yellow line is called 20 EMA, and this yellow line will give us an indication about the trend of the market. Whenever we miss any trade, we'll wait for the graph to come near to the 20 EMA, then we will decide about taking a trade. Okay, we will move on to the first day of November. See, the CPR is an average CPR. See this blue line, and this pink line is called CPR, right? This is an average CPR, that is of 30 to 35 points. So the market is not going to be trendy, it is not going to be sideways. So where the market opened, see the first 5 minutes candle. The first 5 minutes candle is not touching any points of H4 or H5, right? So we don't have any price action. So we will move on to the place where the market is heading towards, whether it is H4 or H5. So okay, clearly the market has broken H5. See, what is our strategy? If it is getting rejection at H5, then we can go for the put position, but it is getting a breakout at H4. So taking a call position here at this point is not fair enough, because it may not reach to our target. That is, we will book almost 80 points in Nifty, right? So in Nifty, if you want to book of almost 80 points, we need a good risk reward ratio, right? So it is not possible at H5. So I think it is better to avoid a trade this day, because taking a scalping trade is not according to our strategy. So just avoid taking a trade, because it is a huge gap up. Whenever the market is in gap up, we'll take a put position after this H4 crossing. So it is not giving us a put position, so we don't go for the call position, right? So we just avoid taking a trade this day. Most probably we'll see for a position in the morning itself. If we don't see such a type of position, then we just avoid taking a trade, and we will move on to the next day, that is 2nd November. Here the 2nd November first 5 minutes candle is a huge bearish candle, so we don't have any price action, and we will move on. See, when the CPR breaks to the downside, it will indicate us that the market is going to be bearish, but we need a retracement. So this is called retracement. I hope the market is going to be to the downside. Okay, it was clearly according to our strategy, it has clearly reached our target. So see, since the market has clearly broken the CPR, we just went for a retracement. Here at this point, if you take a put position, your target will be up to L4, not more than L4, because sometimes the market may take a reversal at L4. So it is better to take a exit at L4. And we will move on to the next day, that is 3rd November. See the first 5 minutes candle. The first 5 minutes candle has clearly a bearish bullish candle taking support, that is, it is breaking L4. So it is giving an indication that the market is going to be bullish, so we can take a call position. See, if you see these previous 2 days graphs, you can get an idea that we are going to take a trade in the morning itself. Okay, with this first 5 minutes candle, I am very sure about taking a call position, because see, our stop loss will be very small, because our stop loss will be below L4 only. Okay, Yes, our target was clearly reached. See, on third, our target was hit. And we don't take this trade. See this trade? We just take this trade because we'll trade in the morning itself. And we don't have a price action about taking whether it will continue to go to the upside or to the downside. So just avoid taking another trade. We always take single trade in a day. And we'll move on to the next day, that is 4th November. Here the 4th November candle, here is a reversal candle. Still we don't have a clear price action, so we'll wait for some time. Though it is to the bearish side, I don't suggest you to take any trade, because here this is L3, right? We don't know whether it may take a support. Yes, it was not giving us a clear direction. Here this is the place where it is breaking to the upside, but I will suggest you, when the market has clearly breaking to the downside, but at L3 it since this L3 is very near to it, it is not possible for the market to break to the downside again and again. So breaking to the downside and breaking to the upside, what it is indicating, it is indicating that it is better to avoid taking a trade. So I suggest you to don't take any trade this day. Okay, see, you just avoided taking a trade because this is more almost 3 hours of consolidation. We don't know whether the market will give us a clear direction, so we most probably do the trade in the morning itself, right? So most probably avoid taking a trade. See, if you can take a trade here, this reversal, that is H3 reversal, you can take the trade, but your target will be up to this point only. What is this? 1832. Here this is at 1870. So it's only 40 points, but we book almost 80 points, right? So I suggest you to don't take any trade. See, at this point CPR is breaking to the top side. You can take a call position, but it's up to you according to your risk reward ratio. And we will move on to the next day, that is 7th. The first 5 minutes candle is looking like a reversal from the top, right? So I suggest you to take a put position only. Yes, it was a clear reversal, and where you should book the profit is up to you. It's clearly our target hitting. See, if you observe this 7 days of graph, there are the days where you are going to hit your target, and there are some days where you should be away from the market. This is how you should learn about the market. You should trade only when the market is giving you the setup. Okay, we will move on to the next day, that is 9th. The market opened huge gap up here at this point, and observe the first 5 minutes candle. The first 5 minutes candle is indicating the bearishness, but it is not touching H4, right? So I'm not trusting this graph. And see, in this type of days, how you should manage is, you should correlate with bank nifty or IT sector. When it is supporting us to take a put position, yes, you can go for the put position, but it's up to you whether to take a put position or not. So we'll move on to the next day, that is 10th. Here this 10th first 5 minutes candle is not giving any indication, so we will move on to the next candle. This second candle is clearly indicating the bearishness, so we can take a put position at this point. And see, yes, it's a clear breakout, and it's almost a consolidation of 2 hours, and it was clearly gave our target, so it's a target day. So we'll move on to the next day, where the market opened. The market opened a huge gap up, so I just avoid taking a trade when the market is huge gap up. Even if I take a trade, I will take only 40 to 50 points booking. See, in this type of gap up days, how you should trade is, the 20 EMA, this 20 EMA is there, right? It should go to the graph. When this 20 EMA goes to the graph, what does it indicate? The market is sustaining the bullishness. If it is rejection, don't go for the call position. So we'll see whether the market is taking support. Okay, see, it's 1 o'clock, still the market is in this range only, it is not at all moving. So if it is taking a support at 11 or 11:30 range, then you can go for the trade, but it is almost 1 o'clock, so I just avoid taking a trade. Yes, it is an no trade day. Okay, we will move on to the next day, that is 14th November. Here the 14th November first 5 minutes candle is a support at H3, right? But we don't take a supporting candle at H3 because H3 is generally a reversal candle. Yes, here we need a reversal candle. The fourth candle is giving us the reversal candle. See, obviously we will go for the put position only and see whether our market is giving our target. Yes, it was a clear target. That is the only trade what we do, and our target is up to CPR. We will move on to the next day. This is my favorite graph. See, when the H4 is near to it and it is getting rejection from the H4, then I will definitely go for the put position only, and our target is almost L4, but we will avoid, we'll just exit here at L3. This is the graph where the market will give us a good movement. It is not possible every day. It's possible with almost we'll get this type of graph once in a month. So see, this is 15th graph, right? Half of the sessions are over in the November, and if you observe, almost our targets are hitting. There are only 2 no trading days and there is no stop loss hitting. So there is no stop loss. Okay, we will move on to the next day. See, whenever the market comes from this point, this L4 will act as a great support. Taking the next trade is up to you. We don't prefer to take a trade if we are clear about the first trade. So we just avoid taking a next trade. And we will move on to the next day, that is 16th November. The first 5 minutes candle is not at all giving us any direction of the market. Whenever the market is inside the CPR, we'll wait for the candles to breaking to the downside or to the upside. See, whether it is breaking to the downside or upside is very important to us. Okay, the market is clearly giving breakout to the upside. So I suggest you to take a call position only, and our target will be at H3. Yeah, this is a simple trade. Yes, we will move on to the next day. The next day's candle is a support at L4, right? So there is a chance the market is going to the upside, but where should be our target? You should not book up to H3. You should exit according to your risk reward ratio. See here, but I don't suggest you to take a call position because the L3 is not see here, the L3 is not inside the CPR, though it is taking support at L4. This stop loss is very big, right? See, it is 850, it is 830. What is it indicating? 30 points only. Okay, you can take the call position. Yes. See, this is the graph where our stop loss was hit, that is 17th stop loss. Yes, 17th graph is giving us the stop loss only because if you see it clearly, if you take a call position at this point, that is 380, it is 420. See, it is only 50 points movement was done, and moreover it will give us a stop loss only. So this is the graph where the Camarilla points are not up to the mark. See, it is very near to, there are many resistances. It is taking trade is not so easy. Even without seeing the graph also, I am telling you, it is confusing. Yes, it was very confusing graph. These are the days where you should save your capital according to your, if you are managing your risk, definitely you will be in the profit in at the end of the month. Okay, one stop loss for us, and we will move on to the next day, that is 18th. Here the 18th graph is a reversal and it is a huge candle, right? So we don't prefer to take a trade because the stop loss will be very big, right? And where you can go for the trade, if the market definitely we don't take a put position, right? So we'll take a call, but where we should take a call is the point. You should not take a call here at this point, because it will definitely again go down and again it will come up. If it comes to the upside, then you can go for the call, otherwise avoid taking a trade. It is not giving us the trade according to our setup, right? See, it is a huge reversal and it is just following the same market. So I just avoid taking a trade in this type of trade according to my strategy. I don't though that market is very trendy, but I don't prefer to take a trade today, that is on 18th. So again one, no trading there. And we will move on to the next day. Here the next day, observe the second candle. This second candle is giving us the indication the market is going to be bearish. Yes, it is a bearishness, but where you should exit is very, very important here. If you enter here, your target is here at this point, but it is not reaching. So it is a break even trade, not a target day, because it is, but see the distance, it is 120 to 220, so 100 points is there, right? Here if you exit 140, it's 60 points. Okay, it is not giving us 80 points, but it is a break even trade, but that is, you can book almost 30 points at the end of the day. So we will move on to the next day, that is say 22nd November. Here observe the first 5 minutes candle. The first 5 minutes candle is a bearish candle, but it is, though it is a reversal, it is breaking the CPR, still we don't take a trade because we don't take a trade near CPR. So we will move on to the next candles. See the candles here, this is a breakout where you should enter when the CPR breakout to the upside and the L4 AH4 is near to it. This type of trade you should enter in the graph when the market is giving again the retest at H3. Yes, this is the place where you can again enter the trade and see whether the market is giving us yes, it is clearly in our direction only, but you are entering here, right? So it is almost 4 hours of consolidation. So I will suggest you, most of the time when the CPR breaks to the upside, already the buyers are exhausted. See this is of almost 1 o'clock. If you see the 1 o'clock, yes, it is again in the same range, right? So if you are in the trade, your premium will get it. So when the market is breaking to the upside, it is better to avoid take. Still, though the market is in our direction, if you are a futures buyer, then you will definitely hit your target, otherwise you'll lose your premium. So we will move on to the next day. In November 23, the first 5 minutes candle is a bearish candle breaking H4. These are the days where we will definitely go for the trade and our stop target will be up to CPR. Yes, see here, this is 240, where we entered is 300, that is 60 points. At this point at 20 EMA, you can exit with 30 points movement according to correlation with Bank Nifty, because this is according to our trade setup, right? You are taking a put position here at this point, booking your trade. See this 250 to 300, it's 50 points movement. So it's up to you to take a trade or not. You enter here, but it's up to you to take your exit at this point. If you exit after the end of the session also, you will not be in loss, because this is according to our setup only, but it is a consolidation trade. So these are the days. See, some of the days are for option sellers. So these are the days where option sellers will get their maximum profits. We will move on to the next day, that is 24th. The 24th, again the first 5 minutes candle is a bearish candle, but see these two candles. Sorry, here this is a bearish candle, but if you observe clearly, these two indecisive candles, and the next one is a green candle, bullish engulfment, right? So whenever the market is giving indecisive candles and bearish and bullish candles, it indicates that you can take a trade here at this point, and your target will be up to 80 points. Yes, it was a clear reversal from there. Why we are not taking a put position here? Because it is a bearish candle, not a reversal candle. You need a reversal candle to take a trade, right? So if you see this green candle, if you are in the put position also, you will stop and reverse to the call position. This is what called stop and reversal strategy. You should again enter here at this point, because it is not giving us a clear direction with the first 5 minutes candle. So if you are in a put position, you will again go to the call position. This is not no trade or a stop loss day. It is definitely our target day only, because it is giving us the direction with this first 4 candles. And the next day, here the 25th graph, the first 5 minutes candle is not giving us any indication about the market, but see, with correlation you can know that higher lows. So here this is the candle where it is giving us the indication about the bearishness. It's generally we'll take a trade at Camarillo points, right? See what the market is going to give us. The market is going to give us the consolidation. It is not giving us any direction of the market. See how the market was. It is just a consolidation. You should avoid this type of trade. So this is again a no trade day, because it is not going inside the CPR also. It is just floating above the CPR. And the next graph, it is a huge volatile graph, that is 28th November. The first 5 minutes candle is not the day to take a trade. Yes, you can take a trade after this third candle, and our target will be up to H4 only. It is a clear call, because the first 5 minutes candle itself is indicating that the market is going to be bullish. With this third candle, you may take a call position. And the next day is 29th November. The 29th November graph is of 490 to 550. It's a wide CPR. So we'll go for the H3 reversal only. That is, at H3 we'll take a put position. See what will happen. Yes, the market is not giving us the trade according to us, so it is a stop loss hitting day again at 29th. See, 17th our stop loss was hit, and again at 29th our stop loss, so two stop loss hittings. Yes, it is obvious that the market is giving a stop loss only. Okay, we will move on to the next day, that is 30th November. Observe the first 5 minutes candle, there is no decision, so we will move on whether the market is giving us any direction. Again, this is a high volatile day. See, whole the day the market is just trading in a range, and then it is moving in the afternoon session. So again, it is a no trading day. So overall, in this November month, there are 2 stop loss days and 4 no trading days. So if the market is giving us 22 trading sessions, 6 trading sessions are for no trading days and stop loss hitting, then we will have 16 trading days. If you are okay with this 16 trades, even though if you are okay with the 10 trading days also, you will be in a profit. So the November month is giving us a good risk reward ratio and a good strategy to take a trade with this CPR Camarilla setup. Thank you. I hope this video will help you. Please subscribe to our channel.